Highnesses, ladies and gentlemen, please welcome Google's Vice President of Global Marketing, Lorraine Toohill.
Morning, everybody, and thanks for joining us this morning. I hope you all enjoyed our Amazon journey last night, and I'm glad to see such a great turnout so early, given how late people were in the potting shed. But we'll continue the Amazon journey later on today. So yesterday's theme was about reviving fortunes. Today is more about people power and the way forward. I was looking around for a timely example of people power, and I thought Saturday night, the Eurovision Song Contest was a good example. Did anybody here watch the Eurovision Song Contest Saturday night? There's a few hands in the audience. Does anybody know who won the Eurovision Song Contest Saturday night? Norway! Go Norway! I'm glad to see there's a few Norwegians in the room. I know Hans was very disappointed that Sweden was beaten by Norway in the Eurovision, but in good old traditional Eurovision fashion, Sweden did vote for its neighbor Norway, which, as we all know, is how the voting works on the Eurovision. But why am I talking about the Eurovision Song Contest? A couple of interesting facts. First of all, it was watched by 110 million people. Now, I was amazed the show was even still around, but when I heard it was watched by 110 million people, that got my curiosity up. So I did some investigation, and it turned out they're really smart about how they use the internet and technology. They're actually a Swiss-based entity, and they've been really clever about how they've worked with many of the internet players. They had 22 million people watch the show, the different artists on YouTube. 1 in 10 tweets on Twitter on Saturday had the word Eurovision in it. So it's tremendous, for an old, archaic show around since the 1950s, to see so much internet buzz around this show. So it's a good example of how you can convene the power of people to get them to act, to watch, and to participate. So I thought that was a fun example of people power. But on to a few more serious examples, which you'll hear about today. Just some of the examples you'll hear about is someone like Oscar Morales, who went from a Facebook page to an incredible journey of 12 million people marching across 200 cities against the FARC. You'll hear about Sunil Shah and her year of a lifetime campaigning with Obama and how they use the internet as a campaigning tool. You'll hear from Jared Cohen and how he's part of the Hillary Clinton's team, how he took some Silicon Valley execs to Iraq and back in one piece, narrowly avoiding some suicide bombers along the way. Incredible stories. So you'll hear all of their stories later on today, great examples of people power. Now, yesterday we talked a lot about the economic crisis, but there's one group of people who we didn't get to yesterday, so we're going to remedy that this morning, and that's the bankers. So we have joining us today, we have Anna Botín from Banesto and Anshu Jan from Deutsche Bank joining us. And just to keep the banks under control, we'll have George Osborne, who is the Shadow Chancellor of the Exchequer here in the UK. So that'll be an interesting session this morning. Yesterday also we were asked to play a part by Prince Haakon, Mary and Mo, all of whom pointed out that we have a power to make a difference. With Itai, we learned how to be better, more open leaders, conductors of the orchestras that we all manage. Leadership is a very common theme through our event today. There's a saying, never doubt that a small group of thoughtful, committed people can change the world. Indeed, it's the only thing that ever has. I think that's a really cool expression. But many of the people you will hear from today, they are really changing the world. You'll hear from European royalty with Prince number 3, His Royal Highness Prince Charles, who won't like to be called Prince number 3, but anyway. We'll hear from Awazan tribal chiefs, Chief Amir. They're united in their fight to protect their environment. You'll hear from famed communication strategist Alistair Campbell, to an everyday person who spoke out with extraordinary consequences, Oscar. You'll hear from a storyteller who inspired a generation of Americans to look at politics in a new light, Aaron Sorkin, who wrote The West Wing. You'll hear from people at the heart of Obama's new team. You'll hear from young entrepreneurs just bursting into the spotlight, Playfish, Spotify, Spinvox. You'll hear from one of the most famous business entrepreneurs of our generation, Sir Richard Branson. Iconic product designers to orchestras turning music on its head, from advertising renegades to astronauts. So it's a pretty varied day today. We'll cap it off at the close of the day, coming closer to home, at least for me, to 2 of Google's bosses, Eric and Larry. So we've got quite a lot to get through today. Last year I talked a little bit about Andy Warhol, and I used a quote of his, in the future everyone will be famous for 15 minutes. So I found another great quote of his for this year is actually quite useful for good quotes. It's a good tip. His art's a bit strange, but his quotes are good. I probably should have said that either. They say time changes things, but actually you have to change things for yourself. So the people you meet today, the one thing they all have in common is they embody that spirit, and I hope that they will all inspire us to do the same. So on that note, before I hand over to Christia, I have a small favor to ask all of you today. If you could, during the day, go on the screens outside, please give us some feedback and thoughts for next year. We will start planning Zeitgeist number 5 in a matter of months. And as always, your feedback, in particular, your recommendations for speakers who you'd love to hear from, is a really great way for us to build on next year's event. So on that note, can I please welcome back on stage Christia Freeland for our morning session, The Way Forward.
Anna, can you sit here? Georgia? Okay, well, thank you very much for joining us again, and thank you everyone for showing up so early this morning. I thought Lorraine and Nikesh might give us a little break after last night, let us start a little later, but I see it's back to work. I noticed there wasn't a lot of loud applause when Lorraine highlighted the fact that we're going to talk to bankers this morning, which leads me to feel that we've sort of assembled a panel of scoundrels. We have bankers, politicians, and journalists, probably 3 of the least popular professions at the moment. But we have also assembled a panel of at least relative winners. Both Anshu of Deutsche Bank and Anna of Santander are, relatively speaking, representatives of banks that have fared relatively well in the crisis, and we'll talk about that. And I know that George is hoping that his party will be one of the big winners out of this financial crisis. Our theme this morning is going to be obviously talking about the causes of the crisis, its longer-term consequences, and particularly given the people we have here, I'd like to also explore the question of the changed relationship between finance and government. We have an hour. As Lorraine pointed out, Nikesh and Lorraine seem to have been working on a royal theme this year, and we have the Prince of Wales arriving at 10:45, so we'll have to end quite promptly. We're going to run this panel the way we've run previous ones, with me talking to each of our distinguished panelists for 15 minutes. Then we'll have 15 minutes for your excellent and avid questions at the end. They're laughing because they actually haven't been that good at asking questions at previous panels, but I'm sure you'll all inspire them. So we're going to start with Anshu Jain, who is the head of global markets at Deutsche Bank. And I wanted to start, Anshu, by asking you what, with hindsight, you and Deutsche Bank feel you ought to have done differently. What could you have done to have maybe helped to avert the financial crisis, and certainly to have made it less painful for you and your institution?
Well, I'm not sure, Christia, what we could have done to have made the overall crisis better, but certainly speaking on behalf of our shareholders and our stakeholders, the level of leverage within the banking system was way too high, and Deutsche Bank was no exception. So even though you were kind enough to say that we've fared relatively well through this crisis, the fourth quarter for us professionally and for me personally was about as traumatic as it can get. So frankly, even with that relative outperformance, the weight of that leverage when the markets behaved the way that they wound up doing in the fourth quarter was very painful. As opposed to giving you 10 reasons, I would really hone in on that single one.
From looking at some of the past presentations that you've made, I know that you're a fan of Charles Kindleberger. Is there any way that we can avoid this cycle of mania and then crash, this cycle of having moments when lots and lots of leverage seems like a great idea, and then we have the hangover in the fourth quarter that you've just experienced?
Well, I don't know if I'll call myself a fan of Kindleberger as much as the fact that when you go through a crisis like this, I think it's important to contextualize this. $1 trillion in bank losses, 58% US bank capital wiped out. First time in 60 years that we'll actually experience GDP contraction. First time in 25 years that global trade will actually drop by 9%. This one's a biggie. And if you just look at this, it's very easy to get lost in the forest. So I think we're all trying very hard to get some sense of perspective. And the one which I get is to contextualize this one within the ambit of other such problems we've had over the last 200 years. And it's somewhat reassuring to know, and this is something which I'd share with the audience, that this cycle which you've referred to, which is really displacement, tremendous monetary expansion, euphoria, and distress. Interestingly enough, if we go back to the tulip crisis, the South Sea crisis, the potato crisis, certainly in times that we've experienced, the Japanese banking crisis, the Asian banking crisis in Russia, they follow this inevitable pattern.
And that's reassuring?
Only in as much that this is not some unique blow-up that we don't have a toolkit to address. I've said that virtually by most measures, this crisis feels like it's the worst we've had certainly in the 20th century, and by, I think, pretty wide acclaim now, it dwarfs even 1929. Perhaps not in its longevity, time will tell, but certainly in terms of the severity of impact on the banking sector. It's reassuring because the fact that we've seen it before means that there are some lessons which we ought to have learned, which do need to be re-emphasized again. The act of displacement this time around, I think, was the outsourcing of savings and manufacturing to the emerging markets. $2.5 trillion in financial surpluses which were built up in Asia, which needed to be...
Global financial imbalances, it's China's fault?
Nope, not China's fault at all. If you're looking for faults, I would say that outsourcing, this feeling that others can create the labor and do the saving for us. The tremendous growth in financial leverage, we've talked about that. Banking system going from an average leverage of 20 times to 35 times within 5 years. The growth of non-bank banks, hedge funds going from $1 trillion under management to $2 trillion under management. Lessons which have to be learned, frankly, by rating agencies, government, and policymakers. I think there is a long list of things that have contributed to this particular crisis, and yet the cycle has resonance with what we've seen in history before.
You've just referred to non-bank banks and to hedge funds in particular, which I know is an area of expertise of yours. Yesterday, Nassim Taleb pointed out that actually, despite all the concerns that were being voiced in 2006, 2007 about hedge funds, actually, they've proven to be the safer actors. And it's the bigger, very connected, too complicated, too connected to fail traditional banks which have caused the bigger problems. Do you think that's a fair analysis?
I'd agree with that completely. I think hedge funds have actually outperformed not just all the dire prognosis which was leveled at them. Don't forget, 1998, the LTCM crisis in many ways was the anti-lock braking system process which happened. If they hadn't had that crisis back then, hedge funds might have been even more exposed to problems than they actually wound up being. Regardless of which way you slice it, hedge funds have outperformed the broader equity markets, and they've certainly outperformed banks. Again, the crisis is not over yet, so I think it's a bit early to draw a line and write a postscript on it. Hedge funds have dropped in total assets under management from the $2 trillion I talked about to $1 trillion. Leverage has come down from 4 times to about 1.5 times. So there has been a tremendous amount of deleveraging in that sector, but they've done well.
What's the biggest lesson that you and your colleagues at Deutsche Bank have drawn from this crisis? What have you resolved to do differently in the future?
I think you asked that question the first time around, Christian. I would repeat elements of that answer, which is I think leverage would be the main thing which we are revisiting.
Have you put new rules in place, or you're just more careful about it?
A combination of rules as well as much greater prudence. The rule changes which are going through are actually going to be implemented across our entire industry. And those have to do with reliance on models, reliance on a feeling. And I'm sure Nassim must have talked about this yesterday. It's something which is a favorite theme of his. The underlying assumptions that were made behind the risk-taking which we embarked on have been revised and delevered very significantly.
Do you share his skepticism about computer models now?
Shared them all along, actually, and I have to say that one of the reasons we haven't gone through quite as much distress as some of our peers is we did not believe that 6 and 7 standard deviation events are as unlikely as statistics would tell us.
We have a leading politician here. How would you assess the political response to the crisis? And I'm thinking globally.
I think the first thing we have to say is that we would be in far worse shape if we had not seen the immediate and coordinated policy response that we've had. So we have to express a clear sense of gratitude to the fact that both individually and collectively, the policy response has been immediate, direct, and very significant.
And coordinated around the world? You feel there has been global coordination?
Definitely. I would say post-Lehman particularly. When the Lehman experiment went wrong, I think simultaneously there was a warning shot that was fired across the bows in New York, London, Frankfurt, Tokyo, Singapore. The financial centers did at that point come together, as did the policymakers. So my first sentiment would be one of gratitude. But I have to say...
So you don't hear that very often, George, do you?
But the second and accompanying thought would be to caution against an autoimmune response, which is very much something we need to keep an eye on. Anytime you force taxpayers to step up, which indeed in the US particularly, and to a large extent in this country as well, when taxpayers, many of whom did not enjoy the fruits of that euphoria and that wonderful surge of value creation that took place, value within quotes, over those 5 years, to expect a lot of those to step up and now pay the price to bail banks out. It's a very emotive topic, so we have to have great understanding for why the response is what it is. Nonetheless, that autoimmune reaction I talked about, a process which can actually constrain free trade, a process which can actually cripple a return to normalcy of lending functions, is something which politicians have to be very careful about. So that balance between having averted the worst of the crisis, stabilized the financial system, reaching deep into the public wallet to do so, versus now catering to that emotional and populist backlash and getting that balance right, I think is a very tricky issue. And frankly, banks, regulators, policymakers all have to work very closely together to make sure that not only are these mistakes not repeated, but the medicine doesn't wind up doing the patient harm at this point.
How worried are you about that backlash? Are you concerned that there is, across the world, maybe particularly in Europe and the United States, a real public revulsion against the banking sector, against bankers who have had to be bailed out by people who didn't enjoy these ultra-rich bonuses?
Look, I think a lot of this is understandable. So I'm not going to sit here and tell you that this is something which is unwarranted or something which is inexplicable. I think as long as this energy can be channeled in a creative direction, and we can make the world a safer, more stable place, the fact that there is now going to be a greater sense of partnership between regulators and banks and financial systems in general, all of those are very good things. How worried should we be about the autoimmune reaction? I think we should be pretty concerned. I mean, without getting too specific, given this is all on record, I think if you take a look at some of the announcements that you've seen over the last 3 months and sift through them and try and figure out how much of them are driven through vengeance and a desire to exact retribution versus genuinely make the world a more equitable, safer, more stable place, I think the policy response now will fall into both of those camps. And without getting more specific, I think I'll let you and the audience decide which measures.
Are there any particular policies that worry you that seem to have tipped over to being anti-capitalist rather than curative of the crisis?
Look, frankly, the very steps which were so essential to stabilize the system, a pure adherent to the free market hypothesis would say saving any bank, providing any restitution, providing any safety net is anti-capitalist. A ban on short selling has no place in true capitalism. Stepping up and allowing balance sheet relief, the absorption of losses, the injection of capital on non-market terms, all of it is non-capitalist as well, and yet those were essential steps. So for me to simply talk about the inevitable increases in taxation and so on, which are less popular, and call those as interference measures, I think the whole package has been anti-capitalist to an extent, yet much needed. Stiglitz is one who would talk very much about the fact that unbridled free market enterprise doesn't work.
Even Hank Paulson said, I'm doing this to save, I'm acting in an anti-capitalist way to save capitalism.
Correct. And so I think for me this comes down to the length of time that you intervene for. And once you've stabilized the system, to reverse those artificial mechanisms and letting the markets then move back into a healthier state of self-policing is crucial. Nonetheless, policy reform is required at the same time.
Do you think there might actually be a business opportunity for Deutsche Bank specifically in some of these restrictions on your competitors? I'm thinking particularly of the US market, where your top domestic competitors are now really feel handcuffed by the TARP. I can't resist advertising for my own publication today, but we have a story in today's FT about the race by the US banks to repay the TARP. And certainly one of the big points of discussion on Wall Street is how terribly unfair it is that you guys at Deutsche Bank and Credit Suisse across the street can still pay lavish salaries, are not tied by the TARP in the same way that Goldman Sachs, JP Morgan, and so forth are. So maybe this is actually to your benefit.
I'll give you a more general response.
Oh, come on.
To me, in any crisis, to give you the general response, anytime you have such a significant event, it produces enormous opportunity. Regulation brings on the back of it enormous opportunity. The specific one this time around, valuations are at rock bottom levels. So those that have not leveraged have an enormous opportunity. Those that have not got restrictions on their business model have already experienced. If you take a look at the first quarter, the very areas that were the worst affected by the crisis have come roaring back. So I wouldn't say there's anything specific about Deutsche. There's a number of financial institutions, banks, hedge funds, and others who will benefit hugely from the crisis. And we'll see opportunity in this.
And is it possible that we've begun that cycle? Are you starting to feel that with this terrible fourth quarter behind you, you're now back in the space of huge opportunities?
Impossible to call a bottom. Too many people have tried it, and I certainly will not join that list, particularly not given that there's such an extensive public domain record of what we're about to say. There's no doubt that there was excessive pessimism built into the price of equities and credit. You've seen that excessive pessimism taken out, which has produced this phenomenal rally over the last 60 days. But to me, frankly, the things we have to watch out for, it was the US housing sector which led us into this downturn. The Case-Shiller index, which is the best way of monitoring the health of the US housing market, is down about 27%, peak to where we are now. Deutsche economists say that's going to wind up down 40%, peak to trough. If that's the case, there's considerably greater pain to come. We're all very buoyed by the fact that the US banking system has had its health checkmarked with the positive stress test results, which is a terrific thing to see. But there still are toxic assets which are there. We haven't seen a return of the consumer yet. So appetite and demand is still a huge factor. So I wouldn't take that much joy in the huge rallies that we've seen from that excessively pessimistic level that we hit in January to call this a bottom. We remain cautiously optimistic. There's no doubt that the return to confidence is a very good thing. There's no doubt that the whole emerging market theme is a very powerful one and actually has defied, much like hedge funds, a lot of the negative prognosis which had taken place prior to this.
And do you have a judgment as to when it will be safe to go back in the water?
I would, if you ask me for one single thing, I would say if the Case-Shiller goes flat 3 months in a row, we don't need the US housing market to rally. We need it to stop dropping. And if that happens for 3 months in a row, the key to the health of US banks and US consumers, which have been the initial trigger for this crisis, lies in US housing. I think you need a 2 to 3 month period where we reach stabilization in the US housing market. And as you know, Washington's working very hard towards achieving that. Soon as that's achieved, I think we'll feel pretty safe again.
Okay, well, thank you very much, Anshu. That is
Thanks,
a
Christia.
perfect transition to talking to Ana Botin, who is the chief executive of Banesto and also a leading light in Santander, the Spanish bank, well, I should say the global Spain-based banking group. How's that? Which is also one of the real survivors of this crisis. And a measure of that, which I mentioned to Anna as we were chatting in the green room, is on my walk to the office every day through Manhattan, I walk past a sign which encourages Americans to put their money in Santander because it's safer than the domestic banks. So there you go. That's the level of American confidence in the nation's banking system. Anna, Anshu has just been talking about how the American housing sector is really maybe the trigger, the catalyst for the financial crisis. But a lot of people have pointed to Spain as well. You guys went a little bit crazy on housing prices too. To what extent is that a big problem for Spain and maybe more generally for Europe?
Well, I think one of the most important things to come out of this crisis, as far as Spain as an economy, is the strength of its financial system. We have come through this whole period with only one small savings bank needing capital. And I think that's quite amazing, given that we did have an economy that grew for 12 years nonstop and was one of the fastest growing economies in the world, actually. So we have had very strong regulation. We had stricter regulation than other countries. We were forced to do counter-cyclical provisions. And I think this is a key point. I think banking needs to be counter-cyclical. That is, when things are going very fast up, we need to stop that a bit, and vice versa. When things are coming down, we need to provide more loans. And so you need to save for that in the good times. This has really helped us go through this period until now, with just one small savings bank being intervened. And as far as our own bank, Santander, as you mentioned, is really today gets 25% of its income from Spain. We're very big in Brazil. We're big in the UK. In this last 12 months, we were able to acquire 2 banks in this country, Bradford and Bringley and Alliance and Leicester, 1 bank in the US, Sovereign, which you just mentioned. So we have been able to take advantage of the opportunities. We have always been just a boring commercial bank, and that's not so bad these days.
Boring is the new sexy in banking right now, isn't it? This point about countercyclical regulation, is that something that regulators need to impose with a heavy hand, or can we rely on the wisdom of bankers to police themselves?
Well, it was not only the countercyclical. Bank of Spain did not allow us to do off-balance sheet financing. In the good times, we were actually, in the case of Banesto, Santander, putting aside a big chunk of our profits as provisions. And this, even though analysts see through it, they don't really price that into your stock. So I think it is good to have someone tell you, you have to do this. We might not have been very happy at the time. We're very happy today.
Were you lobbying against it?
Not really.
A little bit?
Well, sometimes when you have big crises, Spain went through big banking crisis in the 70s, and that's when Bank of Spain started being very proactive. And there's a very important thing, which is the mission of the regulator. The mission of the regulator is the solvency of the banking system, in the case of Spain. Consumers get protected by other kind of rules, and I think transparency and competition is the best protection for the consumer. So our central bank basically focused on making us solvent, which I think is not a bad idea.
Well, it sounds as if George should probably be taking a trip to Spain and talking to your regulators. But in this sort of conservative environment, how was the huge overheating of the Spanish housing market nonetheless possible?
I mean, I think like in the global crisis, the macro factors are important. I mean, we were having huge growth in Spain at a time when the rest of Europe was not really growing. So we had for a couple of years negative real interest rates. We were actually giving away money. Number 2, there's a huge competition. We have 50% of our system are savings banks. So we compete. There's a lot of competition, which is good for the companies and for the consumer. But there were some excesses made because of this great competition. And so our housing prices went up even faster than in the UK or the US. And that means that now we're having to adjust a lot more. So actually, housing prices in Spain, and Anshu was mentioning the US, even though the official numbers say one thing, I believe the prices have come down from peak to trough probably around 30% already. So if you're looking to buy a house in Spain, maybe now's the time.
Now, Anshu says his economists predict that U.S. housing prices will fall 40% from peak to trough.
In Spain.
Will Spanish housing prices fall that hard?
Well, I think it's all about affordability. What can the average Spanish family pay for a mortgage and for a home? And I have to tell you, today already, we're selling. It's no mystery that we have bought some houses from some of our customers. We have sold 500.
Bought some houses?
We've
That's
bought
a nice way of saying foreclosed on.
Bought.
Yeah.
Not foreclosed, bought. Actually purchased from some of our customers, anticipating that they might have some problems in some cases. We feel.
If someone has to foreclose on you, I guess Anna would be a nice person to do it.
We're nice, but not that nice. I mean, we have shareholders. We try to do the best for our shareholders. And so we, in some cases, and we have said we are not doing that anymore, we have actually not foreclosed, but bought houses from developers, not from individuals. We have actually sold a lot of those. In Banesto, for example, we sold 400 houses in the first 3 months of this year.
At what kind of a discount?
Right, and that's the interesting thing. At the discount, which was around 30% from the peak. But because our loan-to-values were an average of 70, we're basically not losing money on that. And this is important because even though the crisis came later, the adjustment is coming very fast. And that's why I encourage you again to buy, because in the coast, wait a second, in the coast.
She's a good saleswoman, right?
Well, Banesto and Santander, we have only 2% of coastal properties. And those are the ones you want to buy. There's a lot more on offer. And the prices there have probably come out of a lot more, okay? Because that's where really the UK market has dropped off, the German. So that's where the adjustment has been much bigger even, probably. I don't really have an indication of price, of the real prices, but probably 50% in the coast. So.
But so you now think that the market clearing price is overall going to be a 30% drop?
I mean, it's very difficult to say, but as I said, affordability is a key issue, and I actually was going to point that out. The average mortgage, we are now selling these houses where the average payment is something around 800 euros per month with a very attractive mortgage and with the discount I was mentioning. This is for houses that are selling for 200,000 euros, between 170 to 200,000 euros. And this means that, with the 20, not everybody has 20,000 euros, but, there's a big middle class in Spain that does have that kind of income, and they can afford that already. So I think that's an interesting number to look at. The other very important thing in Spain is, which was bad on the way up, but is good now, is that 98% of our mortgages are floating rate, which means the average Spanish household, compared to 12 months ago, is paying 3,000 euros less for the mortgage, and that's a big number. So, we're relatively optimistic that we can get the market going. We're relatively optimistic that once confidence comes back, the consumer in Spain also will start spending.
Anshu has admitted to swearing off leverage as part of his sort of post-crisis New Year's resolution. What's yours? What's the lesson that Santander has learned?
Well, we have learned something. Santander is 152 years old, and this has been true since the beginning. We are very much focused on customers. We have today 70 million customers. Our strategy is different from other global banks. We're very concentrated in fewer markets. So we are big in the UK, big in Spain, big in Brazil, big in Mexico, not so big in the US.
Are you going to get big in the US? Is that?
Not for now. We said we're not buying at the moment, but we're there. So our focus on customers, I think, a renewed focus on customers. We also made mistakes, and one of the things we try to do is stay true to that strategy and that focus we've always had. The second very important thing is risk management. Even though we didn't have subprime, we suffer with the rest of the economy, of course, but our focus on risk has been with us for many years, and this is something we spend a lot of time on. And the third thing is technology. I mean, we invest a lot in technology. We believe being a low-cost producer and giving a good service is only possible if you invest in technology. So those are the three things that through the crisis have helped us, and we will continue investing in that.
Do you see any longer-term change in the behavior of your customers? Are we moving from a high borrowing environment by households to a high savings environment? I'm talking about the United States and Europe.
Honestly, and this is hard to say, and we don't know, but I think there's a fundamental change in the consumer, in the sense that the US consumer has been driving the world, in a way, and I think that that's going to take time to change, to being how it was before. I mean, you can see that in the numbers. Savings rate in the US has totally, reversed. By the way, that has happened in Spain too. Even though the Spanish has a much higher savings rate, Spanish savers, we are 23% savings rate, so we save a lot more. But I think that change has been very, very deep. And so I think that would take time. And we need other economies like China, Brazil, to take over, and Germany, for example, to take over from that.
You want the Germans to be the high spenders of Europe? That's
Maybe
your
not
hope for the future?
Maybe not the high spenders. I mean, it's just enough if they spend a bit more, So that would be nice, yeah.
And do you think this change in consumer behavior in sort of the high spending economies, is it permanent or temporary?
I don't want to say it's permanent, but I think there's a fundamental change. I don't think we'll go back to how it was before. And I think one of the key things for us, and we try to understand our customers, because, again, going back to what we did not do and what we're going to do going forward is we have relationships with our customers. We're not a disintermediated bank or economy. Understanding our customers, and that our customers, I'm talking about SMEs and businesses, that the world is going to grow less for some time. The leverage of consumers, the leverage of banks has to come down. That means a bit lower growth in general.
Even when we come out of the crisis, it's not going to be a great V-shaped recovery?
I think we'll adjust at a lower level for some time because we need to deleverage. And so this is, for us, very important that we understand that and that our customers understand that, so that we can get out of this together, but being more efficient, trying to be more efficient or more productive.
Anshu pointed, I think, quite rightly to the political and the business consequences of this massive state intervention in favor of banks. I wonder whether for you, you worry that it might also lead to an upsurge in protectionism, whether we're going to see the UK government, for example, favoring the British banks that, after all, it now owns, whether you're going to see the US government doing the same thing. Those are markets that you're active in.
Right. There's no doubt, it's difficult to say if that's protectionism or that's strategic focus. I mean, so if I were a politician, I would say, it's not protectionism, it's just making our banks do what they have to do. Some of the not so big British banks have to continue being active in Spain? I mean, you tell me. But that does make it hard for us in the sense that, if you have a customer that, and this is not unusual, medium-sized company in Spain that has 40 banks and has to restructure. Of those 40 banks, there's 30 banks that are not very important to that customer. And a significant proportion usually is foreign banks. So it's
and those
difficult.
foreign banks might have a slightly harder time getting paid back?
No, or they might decide that they want to exit that customer, that market. So it's hard. But I do think we need to work together. I think coordination is key. And I also think that each country is different. So we need to have coordination, but we need to have country-specific policies. Germany and Spain are totally different countries, economies. And so
They
the
do
solutions...
have the same currency, though. Is
Right.
that a problem right now?
Well, it's not a problem right now because everybody's suffering. So, rates are very low. But as I mentioned, 4 or 5 years ago, we should have had in Spain much higher rates. We had negative real rates. And this is like throwing gasoline to the fire. So at this point, it is not an issue. But of course, it's sometimes complicated. I mean, the theory, economic theory, if you can move labor seamlessly along borders and other things, then common currency works. So that's where Europe, I think, is hopefully getting to. And so having the same currency actually is a big asset for all of us.
Okay, George, maybe we'll move straight into that. Anna talked at the beginning about how banks actually, at least in their more timid incarnation nowadays, are quite grateful for the stern hand of government and the stern hand of regulation. Do you think that's right? Do you think the global economy, and Britain in particular, needs tougher, changed rules of the game?
Well, I think the rules of the game will be much tougher in the future, and of course, with hindsight, should have been in recent years. I think regulators, both in the UK but in other countries, will not allow the excessive leverage that took place in some of the UK and other banking systems. I think you'll have much stronger institutions. I think it would be a mistake to assume that the answer is just more regulation. After all, some of the banks that failed were the most regulated entities in our economy. I mean, Northern Rock, a commercial bank, is about the most regulated institution that exists in the free market. So it's not just a question of more regulation. I think it's a question of stronger regulators able to exercise better judgments about the economic situation in general, and indeed able to take a broader view on the economy rather than just simply looking at an individual institution. Now, obviously, in the case of Northern Rock or RBS or whatever, it was a failure both to ask, is this individual business model sustainable? Second of all, what is happening to the overall economy? What is happening to asset prices in the economy and the like? And the failure to sort of join the dots led very obviously to the serious problems that we've seen.
When I first arrived in New York in 2006, we were writing a lot of pieces about how London as a financial center was challenging New York. McKinsey and Bloomberg and Chuck Schumer came together in a report about all the ways in which New York was losing its global position to London. And one of the points strongly made in London's favor was the virtues of light touch financial regulation. Have those been pretty much discredited?
Well, I would say two things. First of all, yes, there was that competition with New York, and I think it's important that Britain remains a home for global financial services. I mean, it is our number one private sector employer. And although there are other industries that I'd like to see grow, and I think we do need a more balanced economy, we do need financial services back on its feet. We need London as a place that people continue to see as the global centre of finance. From a UK perspective, that is clearly in our interests. However, of course, one of the things we should be able to offer is a better regulated banking system. Clearly, as I said, mistakes were made. By the way, I freely admit that not all the politicians either saw the mistakes that were being made. And going forward, I think stronger domestic regulation as part of an international system where domestic regulators cooperate better is important. And when I say stronger regulation, I don't just mean more rules and red tape. For example, the European Union has come forward with a proposal on hedge funds and private equity, which I think at the moment is pretty poorly drafted. But what I do mean is institutions like the Bank of England having much greater authority to step in there. I mean, I think the question...
Should the Bank of England become the prime
Well, I would
regulator?
I think that it's certainly...
Mervyn King had some comments about
yeah,
that.
I mean,
yesterday.
I think the current tripartite arrangement failed and needs overhaul. And I think as a bare minimum, the Bank of England needs to have a much stronger role in macro-prudential regulation. I mean, I think the question you have to ask yourself, everyone in this room has to ask themselves, is we knew it was a boom because in our own lives, our house had gone up, doubled in value, restaurants were full, you could just...
Everyone had a home in Spain.
There's... Lots of millions of people were buying second homes abroad and buy-to-let properties. The salaries you read about in the Financial Times and other newspapers that were being paid. I mean, everyone in their hearts knew it was a boom, but no one was able to call the boom or do something about it. Now, there is a long and very involved academic literature on what you can do about asset price booms and whether you can let the bubble deflate the bubble and so on, and how you go about that. I mean,
do you subscribe to Anna's view about the virtues of counter-cyclical regulation?
Yes, I do, because I don't think you can take the sort of classic view that was expressed by people like Ben Bernanke and Alan Greenspan, that you since you can't spot the boom, just clear up once it's burst and turned to bust. I think you've got to try and do something about a boom in asset prices. And I think using interest rates is quite complicated to do that. And by the way, trying to hit two targets, both a retail price target and an asset price target, is difficult. So therefore, using these counter-cyclical rules, which is basically restraining bank lending and leverage in times when there's a clear asset price inflation, I think is the way forward. And I think the Bank of England needs to be the person or the institution holding the ring on that.
And do you think the Tory party would be prepared to do that? Your sort of Thatcherist instincts wouldn't come to the fore in the time of the next boom?
Well,
because you will have the bankers saying to you, "Come on, we're uncompetitive. You're restraining us. We're not." I mean,
I'm tempted to say,
I'm
tempted to say I was 7 years old when she was elected, and I was still at university when she left office. So I don't.
That's okay. You can read history.
I mean, so Thatcher. I think this. All right, let's put on one side the use of the word Thatcherite or Thatcherist, as you put it. Look, I think a centre-right party is able to say, look, this is not the end of the free market, right? This is not an excuse for a massive leftward lurch into a return to state-controlled economic policy, a state-controlled economy, which we know also doesn't deliver for people. A proper conservative is not a libertarian. A proper conservative is someone who believes in the free market, but believes in the free market as bound in by the rules of society, as expressed through an elected government, strong independent institutions like regulators. And I think sometimes that conservatives can be better at making these points than centre-left politicians who either are sort of desperately trying to prove that they're more free market than the conservatives. Or,
you wouldn't be referring to the current government.
Well, I think, the current government in its desire in the mid-90s to prove that it was no longer a sort of left-wing and it understood the city, it sort of went too far. And I mean, it's something that doesn't, always command an enormous amount of support amongst the city. But I think the fact that it was me as a conservative who said non-doms in this country needed to pay something, make a contribution through the tax system, that I was able to do that from the centre-right of British politics, and I strongly believe that what we said was the right thing, is an example of conservatives being able to say things which actually the centre-left sometimes struggles to say.
And do you share the concerns that Anshu expressed, which I hear a lot on Wall Street, about how maybe the backlash is now risking going too far, and maybe what we're seeing is in the wake of this crisis, a real public loathing, perhaps not of capitalism, but certainly of individual capitalists. Is there a risk that the reaction will go too far?
Well, there was a brief period when the bankers took over that coveted number one spot of being public enemy number one, but British politicians have made a determined effort in the last 2 weeks to get that coveted place back.
I'm sure journalists will have our turn before too long.
Obviously, we personalise things, and both in the United States, the AIG executives in the UK, the chief executive of Royal Bank of Scotland, they have, and the chief executive of Northern Rock have become personifications of public anger and frustration. And you can understand that because there have been some gross abuses. To pay someone an £800,000 pension for destroying the world's largest bank is, a bizarre way to go about things.
Even if it's a contractual obligation, you don't think that contracts need to be honored?
Well, it was a contractual obligation signed as the bank was falling apart. So anyway, we can go go into that at greater detail. But the point I make is this: we have socialised the risk and privatised the gain. And for anyone in a free society, that is a very serious problem we have to deal with. We had to do it because we couldn't let the economy and the banking system completely collapse. But the price we've had to pay, certainly in the UK, and this is true in other countries, is our national debt, which we are all signed up to, has gone from 30% to will be, I suppose, close to 100% now. We have a massive budget deficit. So, an enormous amount of money has been put in. And I think going forward, I think the banking industry and the politicians have to understand that, and to understand that banking is, because it cannot fail, unlike other industries here, and there are people here whose companies, if they went bust, would not have the government step in and bail them out.
I think probably most people here
so to explain that to people, banking is special, and as a result, there are conditions that come with that. And I think, one thing going forward, it is certainly the case that commercial banking will have to be a much safer enterprise, and that we can't allow commercial banks to take the kind of risks that we saw go so spectacularly wrong. And I think the other point as we think about that is that we have to understand that the banking system has a public responsibility, I think, to explain itself a bit more because of the fact we socialise the risk in the banking system. But actually, one final thing, we've got to also find ways to let banks fail in less spectacularly dangerous ways than they have in the last 2 years. I mean, really, we need a bank failure mechanism, not just in Britain, but in Spain and the United States, so that
They have the FDIC.
Yeah, but look at...
Works for the small ones.
Yes, exactly. But look at, the inability to even let Northern Rock fail, I mean, for very understandable reasons. The fact we didn't have a resolution regime that allowed a bankruptcy to take place, that protected the retail depositors, the fact that Lehman Brothers lived as an international company but died as a series of national companies. All of these things need to be resolved, and you've got to. And the fact, by the way, that creditors, were because of what had happened with Lehman's and Washington Mutual, the fear of allowing creditors to take any pain, and it was only shareholders who took the hit. All these things need to be resolved, and we've got to have a system that allows individual banks that make poor decisions to fail, for those people who stood behind those banks to pay a price for that, whilst not endangering the whole economy and the nerve system of the whole economy.
Does that mean a point, we talked about this at our panel yesterday with Nassim Taleb, whose point on precisely this issue is break things when they are small, break fragile things when they are small. Does that mean that banks have to be kept small, precisely so that they can fail without systemic risk being imposed?
Well, I think
Anna's not happy with that idea.
Yeah, I mean, I think it's a very difficult decision for UK policymakers. Obviously, as I said right at the beginning of our remarks, London is a centre for global finance. Our financial services industry is our number one private sector employer. And we are a home to some very successful international banks like HSBC. So, I don't say break up the UK banking system into lots of little bits. But I do say, as the UK government, as the taxpayer, comes out of its very large ownings of RBS and potentially also Lloyds, but certainly RBS, Let us think about the kind of banking system we want to help influence by the disposal of those shares. And I think when you look at something like RBS, there is an argument that we need to have a larger number of smaller banks, and that one of the consequences of the last couple of years, or the last 18 months, has been a lot of the middle rank. Not only have we lost HBOS, one of our big five, but we've also lost quite a lot of those smaller banks that have disappeared, like the Northern Rocks, like the Bradfords and Bingleys and the Lions and Leicesters, which have been bought in the middle of the crisis. And in the disposal of our large bank shareholdings and the privatization of some of the banks we nationalized, we should have a view on what kind of banking system we want going forward. We shouldn't just assume it should be sold to the highest bidder without any regard to what you
We
want
should
the
have sort
banking
of a de registe approach. And
Well, I think
I
I think in this area of the economy, I think government inevitably has to have a view, because we've spent hundreds of billions of pounds, or we've underwritten hundreds of billions of pounds through guarantees. We have spent tens of billions of pounds. I mean, you know, anyone who was a 75% shareholder of a company would be entitled to take a view. And I don't think government in that sense is any different.
Their view would probably be just maximizing the amount of money they got for their 75%,
Yeah.
if they were a private owner.
Yes,
wouldn't it?
but for the long term. I mean, I want the most successful and healthy and competitive financial services going forward. And so I'm saying we're some way off, by the way, this decision. I'm not suggesting we start to exit from these banks tomorrow or next month. But as we do, let's have a view to what kind of banking system we want going forward. We want it competitive, we want it internationally competitive as well as domestically competitive, and we want it much safer than the banking system that collapsed on us 18 months ago.
A popular line that you'll hear now on Wall Street and in Washington is that what you need to do with the banking system is separate the utility function, what Anna might call the boring banker part, from
Yeah.
the casino function, which Anshu's hedge fund clients might
Yeah.
be indulging in. Is that the kind of banking system you think Britain needs?
Well, interesting, I was at a conference 2 or 3 days ago, not unlike this, and I heard Paul Volcker make exactly this argument.
He got it from me.
And also, actually, well, fun, and let me credit I think the FT has run a series of good articles on it. Nigel Lawson, who people here from the UK will know was the most Thatcherite of people, has also made this argument. I think we need to have that debate. I think even if it's rather crudely put in terms of we need to reintroduce Glass-Steagall, which A, never existed in Britain, and B, is a 1930s piece of legislation. But I think it is legitimate to ask whether a commercial bank, a retail bank with large numbers of retail deposits, whether it should be able to operate large proprietary trading positions, hedge funds, private equity operations, or if it does, how do you make sure that those operations are entirely insulated from the retail banking operations? Because when you bail out RBS, the question is, why did we have to, as we did have to, I accept we had to, but why did we have to, not to protect UK depositors, bail out all of RBS? We had to bail out their Far Eastern operations, their Scandinavian operations. The UK taxpayer is standing behind all these things. Now, we had no other option last autumn, but going forward, I think we do, and it comes in, relates to partly what I said about how do you allow banks to fail in a less catastrophic way. Somehow, I think we've got to do more to be able to protect what you really want to protect as a policymaker, which is the depositors and the systemic health of the system.
And not worry so much about the Scandinavians?
Well, not be in a position where you have to rescue the whole thing because there are no other options. And if you think of all these decisions, Bear Stearns, Lehman's, RBS in the UK, these are all suddenly decisions that have to be made in the space of an hour on a Sunday afternoon. And what turned out to be the case was that the policymakers, the central bank governors, the chancellors of the exchequer, the prime ministers, and they had so few tools available to them that in the end all they had to do was seize control of the institution and rescue the entire thing. And so in this Glass-Steagall debate, I think it's worth looking at whether there are better ways to protect the commercial banking elements, which, by the way, there's a flip to it as well, which is, very finally, that you also want a successful and competitive hedge funds and private equity. And if the price is that they get so heavily regulated because they're tied to commercial banks, then you might actually damage the hedge fund and private equity world as well.
Okay, on that note of protecting hedge funds, which is not where I expected we would end, I'm going to throw it open to questions. We have 10 minutes. Any questions? Please.
My name's Joe Garner. I run the UK retail division for HSBC and separately sit on the Financial Ombudsman Service. I don't think the financial crisis is a crisis of funding, capital and liquidity. I think it is a crisis of character, principles and ethics. It's unquestionably true that some banks lent money they didn't have to lend. Some customers borrowed money they couldn't afford to pay back. And in the case of short sellers, some people sold shares they didn't own to sell. And all this happened in what was already one of the most highly regulated, rule-based frameworks that there is on the planet. And yet the reaction of many policymakers around the world is to start making still more rules. In my view, this will be at best partially effective because it is unquestionably true that well-run banks don't need rules to tell them how to operate responsibly, and badly run banks will always find a way around them. Whilst we do need some rules, don't you think there's too much focus on making new rules and not enough focus on the character, principle and ethics of the people running them? If so, can we redress the balance?
Okay. So let's go through it. I'm sure it's a question of your morality, not lack of rules. What do you say to that?
Completely agree. In fact, if you take a look at the institutions that have done badly versus well, there is no pattern to it. You've had very large institutions fail. You've had very tiny institutions fail. You've had highly levered institutions do actually relatively well, and you've had institutions with low competitive leverage go under. So having said that history tells us something, I completely agree with that was more of a statement I felt than a question. And frankly, it's a statement which I completely agree with. And that's why one of the things we really need to spend a lot of time on, and trust me, we're doing it, is spending time on compensation and the alignment of incentives. And so it's not just a case of trusting character and morals. I think there's an element of that. But I think there are some institutional things that can be done to line up the incentives of the decision makers with stakeholders and shareholders in the right way. But I completely agree with the statement.
But I think you've touched on the essential difficulty with that analysis, which is, okay, even if it was a question of moral failing, if we want to avoid this crisis in the future, do we all just want to be better people? Or do we want to try to create some sort of a structure which makes it easier for us to be better people? And if so, does government have to impose that, or do you impose it at the institutional level?
Some element of policy reform is crucial. The point was made earlier that we have to let some banks fail. I totally agree with that. There was a point made that you can't just impose all the pain on the equity holders and not on the debt holders in the capital structure. Those are all valid points, and I think it's inevitable, whether we want it or not. I think the next decade will see significant structural reform of the financial sector, but it's not enough.
So Anna, is it about ethical failing of bankers or about not good enough rules?
Well, I think Andrew answered that bit, so I would like to make a comment. I do think regulation was made for a system that had changed and was essentially different. So regulators, I think, in some way missed the top-down approach, missed the systemic risk that we had. In the US, for one very important reason, regulation was made and the rules were made for a system that was the old banking system that we still have in Spain, where you have a customer, you keep that loan on your books. The regulators did not adapt to something very crucial, which was banks did not keep that loan on the books. So the incentives in the system were all wrong. So I think we do have to be better in general. That's, I think, something it's always the case.
Better people?
Better people, better bankers, better customers.
Better politicians.
And no, that I will not say anything about.
Great.
But character is very important. But let me tell you one thing. It's important for bankers and it's important for customers. When I analyze a risk of a customer I'm giving a loan to, I don't only look at the numbers, I look at the character. Many times customers can pay you back and just don't want to pay you back. And this happens for countries, it happens for customers, individuals, it happens for companies. So character is essential at all levels of society. But I think regulation does have to change to adapt to a disintermediated world. And just one last point. I mean, we are being pointed at the bankers as not lending. Let me tell you one thing. I mean, this aversion to risk in a world where it's not only banks to make loans, it's pension funds, it's institutions, it's even the central banks. The covered bond market in Europe, which is what finances mortgages in Spain, Germany, the UK, basically stopped, especially for Spain and the UK, for 18 months. That means the economy gets less funding, and therefore the system has less funding. So we need to get confidence back into the system, and at some point when we do the regulation, understand that the system is not only about banks lending, it's also other non-banks putting money into the system that finally gets to the consumer. So I do think regulators need to give a thought to the top down and what is the system, how is the system working, and providing the incentives so that it works better.
Okay, George, so moral failing versus regulatory failing, where do you come down?
Well, yeah, I mean, obviously you want moral and ethical behaviour, and you would hope that the shareholders of an institution would be the first line of defence in that. But
You would trust shareholders
Well,
to
no, I'm saying
impose
that-
morality on
I
their
would say
CEOs?
the first line of defence, because obviously it wasn't. I mean, as they ended up losing most of their money, they could have been better at keeping an eye on what was going on. But I'd make this point. A government or a state can't just rely on let's just have good and ethical bankers and let's hope that happens. You've got to have a regulatory regime. I agree, however, with the premise that more rules and to assume that just more rules and red tape is going to be the answer is a mistake. I mean, the FSA, for example, the UK regulator says we just need better regulation. Well, of course we do, but how do you go about achieving that? There were plenty of rules and regulations in place, and that's where
But perhaps a lack of this systemic approach
I
that
think,
Anna was
I
talking
think it
about.
comes down to trusting more in the judgment of strong, powerful institutions like a central bank to make a judgment on the business model and the board and the management of a particular bank. And it's not just ticking the, have they filled in this form, have they complied with this rule, and so on. It's also, what is this bank doing? Is this a way, are they behaving in a way which might actually cause us all a great deal of systemic risk down the track? Could they withstand different scenarios in the economy? Have they thought this through? Is this business model sustainable? And by the way, what's happening across the broader economy? And I mean, the point is that you keep trying to, what happened in the 1990s is exactly what happened in the 1920s. We came up with all sorts of theories and excuses for why it was okay to leverage up a bank 37 times. There was China and it was sucking inflation out of the system and the interest rates were low. Yes, but in the end, we didn't see a pretty obvious point, which was that the whole system had become heavily over-leveraged and very vulnerable to a collapse.
Thank you very much. Another question, please?
Rupert Day. I'd like to ask George Osborne if or perhaps when he becomes Chancellor, how he's going to manage the issue which the US administration is currently grappling with on the repayment of the TARP. On one side, we all agree that our banks should not be government-owned or quasi-government-owned. On the other hand, you've got the political fallout of going back to what I thought was excess payments to bankers, but today I heard they were competitive advantages. And secondly, it might even get worse, and you might have to go back there and bail them out once again. You mentioned exit not now, but exit sometime. How would you manage that?
Well, I think, whoever forms the next government, this is one of the most complicated issues they're going to have to deal with. And this is true of other governments as well. How do you exit from the massive intervention in the banking system? I spoke, and I won't repeat what I said, about the shareholdings in RBS, Lloyds, the ownership of Northern Rock, and so on. And I've explained, I think that needs to be done in a strategic way, and you need to think about the kind of banking system you want in the future as you dispose of those shareholdings. The withdrawal of things like the interbank guarantees, the special liquidity scheme which the Bank of England operates, these are going to have to be, this is going to have to be done very, very sensitively, because obviously you don't want to trigger another loss of confidence in the banking system. So I would do it in a careful way, and I would have a clear view about what kind of financial services system you want. Yes, competitive, but as I say, regulated with some strong independent judgment being exercised there. And of course, things like pay and pension systems and the like aligned to that kind of banking system that you want to see. So this is going to be a long and difficult process, the exit of government from the banking system. And we're going to be, by the way, paying the debts for what has happened for many, many decades to come, potentially. This is one of the biggest challenges we face. But I would just say, have a view of where you want to try and get to. And even though it may be a bumpy path and you may head off this way and that way as you get there, at least you've got an idea of where you're heading.
I'd just like to add a quick follow-up to your reference to pay and pensions. Does that mean that you foresee, even as the British government exits from its shareholding positions, some sort of a government role in regulating pay and pensions of bankers?
Well, I think, well, first of all, I mean, it's not the best week for MPs to talk about pay and pensions, but of anyone else. But yeah, of course, I think pay systems, incentive systems in banks have to be aligned to a safe banking system. And there's a perfectly legitimate role for a regulator to say, hold on, how is this proprietary trading desk being rewarded? And if necessary, this is the price for being in an industry which is A, pretty well compensated, and B, when things go badly wrong, government immediately steps in and rescues parts of it.
Okay. We have time for one more quick question because I see the Prince has arrived, so super speedy.
Make it very quick. And again, it's for George Osborne, but any other points from the panel would be great. You're kind of odds on to take over following the next election if you look at all the polls. But following recent events, of course, David Cameron is talking about an election right now. Do you want to take over right now?
Okay, we'll just have a one-word answer because we do have to wrap up.
Yes. Yes.
Okay. Okay. Please do join me in thanking our really excellent panel. You submitted very good-naturedly to our questions. Thanks a lot.